Hello traders, this is Blake Morrow with ForexAnalytix, and you are listening to the week ahead video for October 8th, 2017, and I want to welcome you to today's weekly video. Before we get started, I just want to mention, if you haven't taken your trial of ForexAnalytix, make sure you click on the sign up today button. You can see it right over here, and once you click on that, you can try us for 10 days. It's only $1. When you do that, make sure you download the mobile application. And for those of you that are current subscribers, make sure you do download the mobile application too. So this way you get everything to your Android or iOS device. And you'll love getting all the notifications and support and resistance level breaches and whatnot. So make sure you do that ASAP. Okay, let's talk about this. First of all, this last week. So we got past the jobs report. And what happened is after the jobs report, which, we had really strong wage growth, the dollar ended up reversing. Now, a lot of people are pointing to, and you can see how the dollar reacted on Friday. The dollar had a big shooting star candle reversal, and I'll come back to that in a little bit. But one of the things that we're going to have to pay attention going into this next week, especially early, Sunday, Monday, it is a holiday on Monday. It's a U.S. holiday. It's Columbus Day. But we're going to have to see how Europe and Asia really react to the dollar's poor performance on Friday and see if there's any type of follow through. See, next week, as we get into it, it's going to be a pretty important week for the dollar, because we do have producer prices and consumer prices and also retail sales at the very end of the week. But we want to see if that inflation continues to increase like the wage inflation did. Now, a lot of people point to the wage inflation increasing because some of the lower end jobs, if you will, during all the storms, people lost those jobs, but the higher end jobs, people with the higher income levels, they tend to keep their jobs, so we get some wage inflation. But I don't know if I'd necessarily tip my hand to that. But what I would say is wage inflation is continuing to increase, at least slightly, and to see inflation on a consumer and producer level is going to be very important for dollar bulls. And if we don't get it, well, this turnaround or the false breakout, and you can actually see it on the dollar index here. I'll just point it to you on the here, you can see it right here on the daily chart of the ForexAnalytix platform. You can see that we did post a shooting star. We also hit the 38% retracement right here, or actually 23% retracement rather, and that's rather important rejection. Now, one of the other things that's so important about this dollar chart, and I'm going to take you over to this price chart just because there's less on it. It's a little bit less busy. Is from the highs that you can see here, and that was back in the end of 2016, to the lows, or actually that was inauguration day. I should know that. And then the low that was posted back over here this last month, we've only recovered to 24%, which it's a bit of a problem, because if we turn around and reverse here, and we don't set up some sort of like inverted head and shoulder pattern over the course of the next couple of weeks, if we hit new trend lows, or we come back and test these trend lows, that means that we're probably going to have a fairly explosive move lower in the dollar. Now, I try to think ahead about what could possibly do that. What could crater the dollar over the course of the next couple of months? And I'm sure you guys and gals, your minds run wild when you think about it, because there are several different things that could move the dollar into new trend lows. But the fact of the matter is, when you're talking about price action in the markets, when you have a shallow recovery or a shallow bounce in this case, the continuation move can be quite violent. So that's something that if you're a dollar bull and we start moving back down towards these lows, these trend lows down here, whether it's 92 or 91 on the dollar index, you got to think what comes after that. And because I know, and I've been watching, especially over the last couple of weeks, there have been a lot of people trying to play this dollar counter trend recovery. And we did, and you can't ignore the fact that we posted a false breakout actually on Friday. So that and a key reversal candle being a shooting star. So that's just a few things to think about when you're talking about the dollar. Now, also, what I'd like to talk about is I'd like to talk about gold. Let's take a look at gold really fast. Gold stopped at a 618 retracement. You can see it right here, and we had a really sharp recovery off of some previous trendline support. You can see it all through here, and that could lead to a recovery. Now, again, if gold bounces, then that typically means the dollar is going to bounce as well. Well, there's another instrument we should also pay pretty close attention to, and we should pay close attention to the 10-year treasuries. And what you'll also notice in the 10-year is we had a false breakdown right close to the 125 like 10 level, 125.11 actually. We had a false breakdown. We set up a hammer, and this recovery here, or this false breakdown, could quite possibly lead us back up above 26 in the 10-year. Now, what that means is if bonds rally, yields drop, and if yields drop, that tends to affect the dollar. So what dollar pairs could be affected? Well, one of them in particular could be the dollar yen, which you'll see we set up a shooting star on Friday. Also, false breakout. It's almost a mirror image of the 10-year. So if the 10-year bond market, or bonds in general, you can look at the 30-year, especially if you're looking at, if the yield curve is flattening or if it's widening, or you want to look at a 2-year treasury note, whatever bonds you're looking at, if they are rallying, tends to mean that the dollar is falling because yields are coming down, and the most sensitive to bond yields tends to be the dollar yen, and that's been a long-standing correlation for a while. So if the dollar yen starts to reverse, what else does that mean? Well, that could mean that stocks are under a little pressure too. But one last currency pair I want to bring to your attention is the euro yen. If you were listening to our videos after the French election, all right, you could go back and go through the YouTube channel and go look at about mid-April this last year. Okay, or this year, excuse me. So talking about 6 months ago, just go back and take a look at what we said about the euro yen. Well, we had a nice, I think that was a Gartley pattern at the time. And since we hit that 115 level, the euro yen has been just absolutely on fire. We rallied all the way to 136. That's a what is that? A 2200 pip rally or 2100 pip rally. That's a huge rally. All right, now what we did just over the course of the last couple of weeks, and let's go back over to the weekly chart. Oops, that was the 4-hour. There we go. There's your weekly chart. Yeah, we had a Gartley pattern. We also hit the 618 retracement over the last couple of weeks. So that's from the highs back in 2014 to the lows of 2016. We hit the 618 retracement basically at 134. Now, the reason why this is important is because after that rejection, we are now coming down to some trend lines. So you can see horizontal support, also upsloping trend line from here, 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 and here. If we break through 131.70 in the euro yen, remember, we just came off of a 2,000 plus pip move. There's a good chance that we could slide to 130, to 128, to maybe even, as low as, or this 126 level. Those are all very achievable targets after such a big move. It's something that is on my radar and is something I will be paying very close attention to going into this next week, especially knowing how high the stock market is and how far it's gone. To see a little bit of a pullback wouldn't surprise me at all, and I would be looking for that to confirm a euro yen breakdown if it does happen. Anyway, guys and gals, those are a few things that I'm paying close attention to. If you love this video or you like it, make sure you click the thumbs up button on YouTube. That always helps us, as far as it makes me feel better about doing more videos for you each and every week. and also make sure you subscribe to this channel. And guys, if you don't listen to our live analysis every single day that's free, and you can hear my voice and the voice of our other contributors like Nicola Duke, Grega Horvat, Stelios Kanto Goulas, Steve Vulgaris, and obviously our host Dale Pinkert. If you don't, and plus he brings in so many great interviews almost each and every day. You guys got to listen in. It is free. It's our face webinar. Make sure you follow us on Twitter to get the link. But guys and gals, thank you so much for listening in, and I hope you guys have a great trading week this next week.